Quint, you own Alphabet. Are you adding to your position given today's pullback? What do you make of these legal matters?
Yeah, thanks for having me, Tyler, on this deluxe edition today.
Yep.
We're not adding today, but I would not be opposed if it continues to be a buyer. I think if anybody has been sitting on the sidelines waiting for a pullback in a great business, now's your opportunity. There was an interesting note out from Baird today. They talked about, whether this was even going to be possible. I'm not an antitrust lawyer, so I can't really add any credence to that. But the reality is, Alphabet's an unbelievable company. I mean, they have no debt, $45 billion in cash, trading at a very reasonable multiple, 18 times forward, and they've grown that EPS 20% over the last 5 years. Everybody wants a pullback in a great stock, and then when it comes, they're scared to pull the trigger. Well, we're getting that now. So again, this would be a great opportunity. If we didn't own it, we'd be a buyer here. We're waiting to see how the dust settles, probably in the next couple of days, and we will add more Google or Alphabet on this pullback.
I hope they come up with some good kind of counter recommendations, the company itself, because as a user, Chrome is, I enjoy it quite a bit. Let's move along to Deere, whose shares are at an all-time high today after they topped fourth quarter estimates, and some interesting details on how they'd be affected by tariffs. SEMA Modi has those details. SEMA?
Kelly, that's right. Expectations were low going into this report after Deere's competitors, AGCO and CNH Industrial, slashed their respective outlooks. John Deere, though, acknowledging today that the agriculture market, yes, remains challenged, but pledged that they will make next year a year of discipline as farmers pull back on purchases. And yes, when Deere CEO John May was asked about the prospect of tariffs and a potential change to immigration policy, he made the point that Deere is more insulated, with 75% of all products it sells in the U.S. are assembled domestically by 30,000 employees across multiple states. And remember, President-elect Trump has threatened to slap Deere with tariffs if more production is moved to Mexico. But overall, it seems like investors like what they heard on the call today, with the stock at a new high, on track for its best day since August of 2023. And keep in mind, the average price target on Deere's stock is $425, which is in fact lower than where it's trading at right now at $441. Kelly?
Wow, SEMA, thank you very much, SEMA Modi. Quint, you've also got a position in this name, so you must be feeling pretty good. You going to add more?
Yeah, sort of like Alphabet a little bit, Kelly. We'll wait. We won't chase the move today, but we'll wait for a little bit of a pullback. But this is a great example of a report that was not priced in. We're seeing a lot of reports that are priced in. They're beating NVIDIA, obviously, and it's pulling back. People are scratching their head. This was not priced in, and SEMA did an exceptional job. I mean, they reported 455. The whisper was 419. They reported 11 billion, which was declined quarter over quarter revenue, but it was well above the 9 billion expectation. When that is not priced in, you get what you're seeing today, which is an 8% move higher, an absolute dominant move. Now, this has been capped because, as SEMA reported, there's been some speculation. What about that 100% tariff if they move to Mexico? I don't think that's going to happen. The CEO made it very clear they're very proud of what's made in the United States. So we think this is an opportunity. This stock can go much, much higher from here. They have a tremendous amount of debt. That's been a concern of mine in the past, but they've managed through it very well. Any pullback here, I think we'd be a buyer adding to our position for sure.
And finally, we got Starbucks. Shares are moving higher today after a report suggested the company could sell a stake in the China business to a local partner. Turning around the China business has been a top priority for the new CEO, Brian Niccol. Let's get over to Kate Rogers for more. Hey, Kate.
Hey, Tyler. So in response to that story from Bloomberg's, Starbucks telling CNBC in a statement, quote, "We are working to find the best path to growth, which includes exploring strategic partnerships." Now, for context, Brian Niccol has yet to visit the market as CEO and needs to still meet with the team and get an understanding of the business and market dynamics, as instead he's been very focused, as we all know, on the U.S. business. I asked him last month about options in China after earnings. He told me there is, quote, "a lot of growth in the Starbucks China business, and how we capture that growth and the partnership that we potentially take on while we do that is still to be determined." Reminder, same-store sales in China fell by 14% last quarter in that market. Now, I spoke with analyst Andrew Charles of TD Cowen this morning, who said there are really two potential scenarios here for investors. If you're bullish on China, you'd want Starbucks to maintain its stake, so a joint venture would make more sense. Waiting it out without selling off means you'd reap the benefits of improvements in that market. Now, if you're a little more cautious on China, does Starbucks sell it now, de-risk the business, and have Nichols' focus really be even more so on turning the U.S. business around. And it remains to be seen what the company decides to do. But as you said, shares up just under 2%, Tyler. Back over to you.
Kate, thank you so much. Let's go to Quint now. How are you trading Starbucks, sir?
I'm not. I wouldn't touch it. I mean, you're in an environment, a bull market, where there's so many stocks working. I just don't know why I would put capital behind a turnaround play. Nichols got his work cut out for him. A terrible balance sheet, negative book value, earnings are declining, multiples are too high. You know, personally, they should sell the China interest and use that capital to shore up their balance sheet. I just don't see any rush here or any desire to venture into this until there's a real, meaningful, fundamental turnaround in the story. Then you can go in. I love the coffee. I don't love the stock.